So at allstarcharts.com, we incorporate what is called the top-down approach. So we start from a global macro perspective, and we look at, we pretend we're standing on the moon, right? We look at the entire world. If we're talking about the stock market, it's not just the S&P 500 or the Dow or the NASDAQ or the Russell 2000. Stocks trade, all over the world. We're talking about an asset class. So we want to see is if there's risk appetite towards equities as an asset class all over the world, or is there more risk aversion? And we're going to look at every single index all over the world, and we're going to say, okay, are more of them going up or are more of them going down, or are most of them just going sideways and they're just a hot mess, right? We need to identify the direction of the asset class, and then we move to the country in question. Let's just call it the United States of America. Then once we have identified the direction of equities overall, now we're going to dive into our country, right? We're going to look at the S&P 500, the Dow Industrials, the Dow Jones Transportation Average, the NASDAQ, the small caps, mid caps, micro caps, right? We're looking at equally weighted indexes. We want to take a weight of the evidence approach, not just globally, but also in America. Are most of them going sideways? Are they going higher, down, right? Then once we identify that overall direction, we'll move to the sector and industry group. So we'll look at energy and healthcare and industrials, technology, financials, right? We'll go sector by sector, and not just at the overall sector level, but at the sub-industry group. So for example, if we're talking about the industrials, it's not just the industrials themselves, it's also the railroads, the truckers, the delivery companies, right? The aerospace and defense. It's the sub-industry groups within industrials. For example, if we're looking at energy, where in energy? If we look at XLE, for example, that's mostly ExxonMobil, Chevron, and some Conoco sprinkled around. I mean, that's what you're looking at. So we want to look at oil services specifically. We want to look at the explorers and producers specifically. We want to look at the refiners, right, which often trade completely different than the others. So fine, you might hate energy or you might like energy, but where within energy specifically is the strength, or the weakness? A great example is healthcare. The sub-industry groups underneath healthcare are, vastly different. You have biotechnology, you have pharmaceuticals, and then you have the medical device companies, you have managed health. I mean, this is just completely different types of companies, and by just blindly buying healthcare, that doesn't make sense, or by blindly hating healthcare, it doesn't make sense, because biotechnology and things like that trade completely different. So we'll be looking at those sub-industry groups. Then once we've identified, hey, this is a sub-industry group within a sector that we like, in an asset class, stocks that we like, then we're going to look at the components, right? So if we're talking about financials, for example, and then for whatever reason we think it's the broker dealers, maybe not the regional banks, but specifically the broker dealers that look good. Fine, so we'll look at the BDs. Where within the BDs? Is it the big guys like Morgan Stanley and Goldman Sachs, like those guys? Or is it more the exchanges like CME Group and the NASDAQ and those types of stocks that represent the exchanges themselves versus the companies like Goldman and Morgan? Or maybe it's both in a combination, and just owning a basket of them like an ETF, for example, is the best way to take advantage of a particular situation in the broker dealers. I see too often that people create strategies and just always want to force that strategy upon the market regardless of the conditions. We want to identify what type of market environment we're in. What are things doing? What are bonds doing? What are commodities doing? What are stocks doing? What are stocks doing around the world? What are they doing domestically? All of these things, and say, okay, this is the market environment we're in, and then we'll create strategies to profit from that.